JJ the CPA here. Hope you're doing well. Well, it is late. I just told Amanda. I said, you know what? I got my pajamas on, so I probably won't be. I'm not going to do any more videos. But then I remembered that I've been saying for a few days I need to get this QuickBooks video out. So, anyways, hey, one of my longest time clients, Sunset Vet. I've been a client since from like weeks after I started my practice in May of 1997. So what are we going to talk about today? We're going to talk about QuickBooks. You ready for this? So QuickBooks as it relates to recording EIDL or the PPP, you know me. So what are we looking at here? All right, so I've got a QuickBooks up here. This is a company that basically I've set up for these purposes. And from this perspective, I'm not going to put in every aspect, but what I wanted to have in here is just some basics. So I've got here a profit and loss, right? We're through April 22nd. Here's a balance sheet. Could be assets, could be liabilities. But this is a company that doesn't have any assets, doesn't have any liabilities, but they're trucking along, and now they got some PPP money. And really the way we're going to set this up, it would be the same for PPP or EIDL. If you got both, I'd set them up separately. And there's like two ways you can go about this. And I've thought about this, and instead of having two ways to go about it, I'm just going to come up with one. And I think I'm just going to come up with one way that I think will work for all of my clients. And that's what I'm going to present to you. And that is this. We're going to set up a new account. We're going to set it up as a current liability in QuickBooks. We're going to record the deposit that we get for EIDL or PPP to the respective new accounts that is a current liability. Then we're going to just record our expenses like we always would. And then at year end, I'm going to make a journal entry and I'm going to reduce down the liability. And I'm going to reflect it as a negative expense on the P&L and on the tax return. And the reason for that is that we then will continue to see true numbers as it relates to this. There is a secondary way to do it, which I'll explain at the end, but only for those that are not as concerned about their P&L and they're more concerned about just tracking the expense from each aspect of the dollars being spent as they're spent, reducing down the liability. But that would be somebody that is not really concerned about their P&L. So wipe that part from your mind, because I'm going to tell you at the end, hey, you've heard everything you need to know. And then if you're super duper duper, QuickBooks accountant, understand debits and credits, ins and outs, then you can listen from here forward on another way to do it. But I'm telling you right now, here's how we want to go ahead and do this. So just for grins, I'm going to walk you through the detail. You're going to go to lists. You'll go to chart of accounts. And here we want to set up. So down here below, you're going to set up an account. So right down here below, and we're going to do new account. So we're going to set up a new account. It wants to know what kind it is. Here's all our different options. Down in the other type, I'm going to hit other current liability. Okay, so now it's setting up a new account under other current liability, and let's call it PPP. Okay, so I'm going to set this up, and now we're going to see that in here in my chart of accounts, okay, there's a bank, okay, and there's the current liability. So now remember, I told you I set up this account, or I set up this QuickBooks just kind of for example purposes. So as you can see, I've got one big fat journal entry. All you need to know here is that I'm going to my bank account. Okay. If I'm going, depending on where you get to it, I can either go through the chart of accounts, or in banking, I can go to make deposit. Okay. So I got my PPP money. So I've got my bank. I went to make deposit. Okay. Who was it received from? I mean, you can track that if you want, First Bank of State, right? this is just who you got it from, other. And then what account? I'm going to select the PPP. So it's saying, what was this money? Okay, and then you can make a memo in here. Maybe you want to put the account number or whatever the case is. It just depends on what you'd want to do. And let's just say that it's $25,000. Okay, so now I'm going to record this deposit from here. I've coded it to the PPP. Okay, so when it says from account, just what account am I coding it to? 25,000, and we're done. So you can see there the PPP showing up on the chart of accounts. If I go to the P&L, because I put it in as a other current liability, it's not on my P&L anywhere, and it shouldn't be, because the money that came in, okay, if I go to the bank, you can see there's a deposit of the 25,000, okay? So on this client, see, I just did one big journal entry to put all the activity in just so I can show you the end. The 422, 25 grand was a deposit, came to that, went to PPP. Where's it go? It's on the balance sheet now, okay? It's under current liabilities. Why is it under a liability? Well, because if I don't spend it at all, I got to pay back the 25 grand, right? If I just went, you know what, I'm just closing the doors right now, or you know what, I'm not paying any payroll, then you would owe the 25 grand back. That's why it's a liability. Okay, it's not income, it's a liability. Then let's say that for grins, you go to make deposit and you got some on the 23rd, right? You got some EIDL, came from the SBA. Okay, so this doesn't, in my opinion, you know, this is who it was received from, and then we're going to set up EIDL. Okay, we're going to set up a new account. I would set that up as well as a other current liability. Now this, so hear me out on that. I understand it's like quote unquote, well, I don't have to pay it back, so how's it a liability? Well, this is where we're going to park it for now. Okay, so it wants to know, yep, save and close that. So now I put it to the EIDL. Okay, let's say I got $5,000 from that. So it came from the SBA. I'm coding it to EIDL, which is also another current liability, right? Date that it's deposited, the 5,000. I'm going to save and close it. So now when I go back to my balance sheet, I'm going to see that I got EIDL for 5 grand. I've got PPP for 25 grand. Okay, so it's been reflected properly in my bank, right? Because here's these two deposits that came in. It's properly not on the P&L. Okay, how could it be on the P&L? Right, because it went to the balance sheet. We don't want it on the P&L. It's not income. We don't want it up here in income. We don't want it in here in the expense. Okay, so the way I'm going to work that is, here's the amounts. Then throughout the year, okay, for the remainder of the year, going to collect income. We'll have all these expenses, all the categories, you know, the payroll taxes, right? Salaries and wages, payroll taxes, rent, right? Utilities, interest expense, right? So if this is, you know, these are numbers based on an actual client that I had to whip up. So I just did a big journal entry and they don't have any debt. But when we're doing a comparison, right? If we want to do a comparison to next year and the prior year, or next year we're wanting to compare to this year, well, we want to know what is the amount of payroll. We want to know the amount of match. We want to know the salaries, right? We want to know the utilities. We want to know the rent for the entire year. So I'm just going to record expenses like I always do, right? And now let's just fast forward. Okay, so we're going to fast forward in time. And now we're looking at financials for the entire year because we've gotten past the first of the year, or we're getting to the end of the year, whatever the case is. You don't have to worry about trying to figure out this date change. Just know this, that now I'm getting ready to do a tax return. Now I'm getting ready to figure out where I stand for tax purposes. So I can do a journal entry, but here's what I actually think is the easiest way for it to be for the non-accountant to follow this, the non-accountant. Um, and instead of doing a journal entry, we can backdoor a journal entry. We can backdoor the adjustment. Okay. But on 12/31/20 for this client, okay, I don't really need a payee because it doesn't matter. But if some people feel like, oh, I need to have a payee. So I'm going to decrease this. Okay. I'm going to decrease the liability by how much? By the $5,000 because I don't have to pay back the IDL. Okay. And I'm going to do it on the last day of the year because I don't need it on my P&L throughout the year. From the standpoint of management purposes, from the standpoint of the bank, right? The bank's going to see on the financials, if you're giving them, they're going to see on the balance sheet, whenever you give it to them throughout the year, they're going to see on this balance sheet EIDL and PPP. So you're not hiding anything from them. On the profit and loss, you don't want to falsely put it in here as income because it's not. Okay. You don't want to reduce down your expenses because the bank needs to see expenses. You need to see the expenses. Management purposes needs to see the expenses. Okay. So anyways, I've just gone to chart of accounts. Okay. This is at year end. I've gone to chart of accounts. I've gone into this EIDL and I'm just doing an entry. I want to decrease this by $5,000. Where am I going to put it? Okay. So you can kind of call it whatever you want, but I think you could probably call it, I think what I'm just thinking that for my clients, we'll call it coronavirus relief funds. Okay. So I'm setting up a new account. Okay. And then for me, I'm going to set it up as an other expense. Okay. I'm going to set this up as an other expense, this coronavirus relief funds for the adjustment at year end. Okay. Got a little warning there. See how it zeroed itself out. So we're zeroed out here. So if I pop over to the balance sheet, okay, you can see that EIDL is no longer there because I zeroed it out, but where is it? You come down to the P&L, okay, where I put it is, I don't want an income, I don't want it in cost of goods sold, I don't want it in an offset of expenses here because I want to see the pure expenses, okay? It's down here, coronavirus relief funds. The reason I put it in as other expense is that it's an offset to the expense. It's not other income. So I'm not going to book it as other income. It's a contra expense, and on the tax return, that's going to show up in other deductions as a negative deduction. It'll reduce down the deduction. Okay, so if I'm doing analysis, okay, and I've gone to customize report here, and it's like, well, hey, I want to know, what's the percentage of income on these things. Okay, so if I'm doing a P&L, it's like, okay, of the money that went in, 2.9% went to cost of goods sold. Okay, 2.4% went to amortization, insurance 7.9%, 30.5% went to salaries and wages. Right? I want all these figures to be pure figures. Okay, in terms of this income, what percentage went to this? Of this income, what percentage went to this, et cetera, et cetera, et cetera, et cetera. So then when we're down here, okay, you can say, oh, what was the profitability? 15%. And then we have this other expense that reduces it down. So it's 313,000, okay, is the net ordinary income. But when you have a reduction of the expense, then your taxable income would be 318,000. You don't even have to understand the taxable from the book or anything per se, other than to say, know this, when you're running your business, okay, you want to see pure numbers, okay? What did I bring in? What are my direct costs? What are my overhead? Here's my net income as a business owner, okay? There's my net ordinary income as a business owner. The bank's like, well, what did you net? 313,000. So I use the other expense, quote unquote, the other income items that are not recurring items, okay? And for these purposes, I didn't do it, but most of my clients down in other expense, I have the life insurance, the disability income insurance, depreciation, the amortization. I won't have in there interest. I'm going to leave that up top. My clients don't really have taxes other than real estate taxes. There's some minor business personal property taxes. But I kind of do mine, not really on an EBITDA. I do my financials on kind of more tax basis. Tax basis as in I want my clients, when we're looking at net ordinary income, to be the most pure number for them before all the skewing of things that aren't really an effect for management purposes only. Management purposes only being one owner, two owner. Okay, we're not talking about a board here. We're not talking about having a CFO and a CEO. We're talking about me and the business owner, me and the two business owners, me and the three business owners. Maybe have someone help them with their books. But the business owner needs to know, what is my net ordinary income before all the hoopla? And I got some clients that down in other expense, we put their salary. Down in other expense, we put, the cost of the vehicle for their corporate vehicle, right? So there's some expenses we'll move down into other expenses, so we have a more pure look. It's at what are the expenses of the business before you, owner. So I digress just to say that basically we can look at this. The client knows, the bank knows that this did not include money from EIDL or PPP. Okay, the expenses here have not been adjusted or, changed in any way. That's our true net income. Now, we have amortization, we have depreciation, right? So you would say, okay, as a business owner, it's the 313, and then they have the coronavirus relief funds. Okay, is the $5,000. Now, if we go and we do the same thing on the PPP, right? So I'm at year end. Okay, so 12/31/20. Okay, let's put the first, whatever. I'm going to decrease that account by $25,000, and I'm going to put it to the same coronavirus relief funds. I'm going to record it. Okay, it's going to make it go to a zero. My balance sheet now shows none of those liabilities. We're at year end here. See how we're at year end? Okay, no liabilities. Then when I come over to the profit and loss, okay, we have these other expenses. See how 313 didn't change. The net ordinary income, 313,000. Okay, we have the coronavirus relief funds, but for tax purposes, we're not going to be able to deduct 30,000 in these expenses. So really, the net income for tax purposes is going to be 343 because the 30,000. Now you can say, well, I thought you said it wasn't taxable. Well, it's not taxable. It's a reduction of your expense, but in some ways, it kind of all works out the same. Whether you include it in income, which you should not, or you just reduce down your expenses to your bottom line. If you'll notice, that 30,000 had an effect that you got EIDL and PPP. Okay. Now, let me just do one other thing. Let's say we know that, so on my chart of accounts, I'm going to go back into the EIDL. On EIDL, we know that we don't have to pay it back. We don't have to pay it back. Okay. But on the PPP, let's say actually you get to the end and you go, well, 20,000 of it is forgiven. Okay, but I'm still going to owe $5,000 when it's all said and done. And I don't mean at the end of the year. You'd know this sooner, right? So it may be that, let's just say you go to 07/15/2020 is when you find out that only 20,000 of this is going to be forgiven. So that means that you owe 5. See how you owe 5 over here. You're going to pay back 5. So now when we look at the balance sheet, okay, you owe $5,000. And when we look at the profit and loss, okay, it's only going to include the EIDL that you're not paying back and then the 20,000 that was forgiven. But see, you don't know that now. This is why I like the way that I'm just going to do this, meaning what I'm doing right now is that when the money hits the bank, okay, I'm going to record the deposit to PPP. I'm going to record the deposit to EIDL. Okay, and PPP is set up as an other liability, other current liability. EIDL set up as an other current liability. Okay, boom, money's in the door. Okay, I don't need to worry about recording expenses. Okay. I don't need to worry about recording expenses against the PPP. I don't need to worry about recording expenses against the EIDL because I just want to continue to let those expenses fall the way that they always have. Okay. Then on the PPP, just going back on 715, you go, okay, 20,000 I don't have to pay back. Well, then only 20,000 is going to affect your number here on the P&L because you're not going to pay back the 20. So that 20,000 grant is going to reduce down your expenses by 20 grand. Okay. Well, what happens with this? Well, you're going to start now making payments on that PPP, right? Interest and principal, just like any other debt. That's why you're only making a $20,000 adjustment to the profit and loss statement, or you're reducing down the liability by 20,000 by the amount that's forgiven, and that offsets to the profit and loss statement because that's the forgiven amount. Okay, and then what's left there is what you got to pay. Okay, now let me go run through one other aspect here. Okay, so just so we don't confuse, I'm going to go ahead and we're going to delete everything that I just did. Okay, I'm going to delete the journal, and I'm going to delete the transactions. Okay, so bear with me. I'm going to delete all these transactions. Okay, let's see. So deleting all of these. So the thing to note here is that I'm going all the way back to the beginning. Okay, we're like you know what, we're good. You should keep watching the second start. At the beginning of the video, I said, hey, I'll tell you when it's good, and I'll show the super duper, individuals. When I say super duper, like totally get debits and credits and all that good stuff. I'm not to that part yet. Okay, so do keep listening for 1 minute. Actually, probably more than 1 minute. But anyways, let's say though that you get money from your bank, but they go, you know what, we're going to set up a special account. So now you need to go and set up a new bank account in QuickBooks because they set up a new bank account. So you can call that Corona account. Okay. So you set up a new bank account. See how you have, this is your regular bank account. Now you have a new bank account. And the bank says to you on 04/21/2020, okay, first whatever says, hey, we're going to go ahead and give you that 25,000. Okay, well, you're still going to record that to PPP. Okay, because they put this money in this special account. So when I look at the journal entry, you can see the 25,000 went into that bank account. This is because there is a separate bank account, separate bank statement coming, separate account number, completely separate bank account. This is when you record that to the PPP. Okay. Now, it doesn't have to work this way, but let's just say for grins, when your EIDL money comes in, okay, that $5,000, okay, you put it in that special account. So in your special account, you have the 30 grand. Okay, and we go to the balance sheet and look at, you have your 5,000 that is on the EIDL and the PPP. Remember, I deleted everything. And what I've done now is I've kind of started over by just simply saying, hey, if the money didn't go in your main bank account and it went into a brand new secondary bank account, like a real bank account, you're going to record it exactly the same. You're going to record the deposit into this new bank account, and just the same as what I told you before, it's going to go into the other current liability, EIDL and PPP. So whatever bank it goes into, you're going to make that deposit go to the other current liability. That's simple. But here's why I'm showing you this, because this is where I don't want there to be any confusion. So if you're going to pay the expenses out of this account, right? You're like, well, you know what? I'm going to go ahead and I'm going to pay ONG, which is the utility company, $500, but I'm just going to pay them out of this special account. And you go, see, this will be a really easy way for me, JJ, because now I know that I got 29,500 left. Yeah, that makes a lot of sense. Makes a lot of sense. So if you want to pay from this account, you can, right? And you go, you know, I'm going to pay AT&T. Okay. I'm going to go ahead and pay AT&T. Normally I would have done all caps there, but I'm not going to go back and fix it. 300 bucks. I'm going to go that to telephone expense. Okay. And you're like, oh, I got to do some payroll. Okay. You're going to do your payroll. This is if you're doing it out of that account. Okay. This is, see, I'm in the Corona account. Okay, look, there's two bank accounts here. Look, bank, and that there's a regular bank account. So this would be your operating account. You pay all your bills since you've always been paying bills. The bank set you up this new account. You say, you know what? I'm going to go ahead and just pay everything out of here. Payroll, AT&T, ONG. Right. So now you know, I got 9,200 bucks left on that. Okay. So we go over to the balance sheet. You can see. Okay. If I were to roll back, look and say, look, here's my operating. I've out of my Corona account. Right. I've spent I've spent money that I got 9,200 bucks left. But look, your liability didn't change. And it shouldn't have, okay? Because when you're spending money out of this, okay, when you're spending money out of your Corona account, you're just putting it directly to the expense. So continue to do that. Just the same as if the money went into the operating account. Okay, put it to the expense. Okay, I'm going to run one more scenario for you. Okay, so if you're in a situation though, and you say, all right, well, hey, I paid these expenses, ONG, AT&T, and payroll, but out of my regular bank account, okay, out of my regular bank account on 421, here came up, you know, the city utilities, okay, so this would be for water or garbage or something, and there was $600 that came out of my regular bank account, you know, so it's like, well, but it didn't come out of my Corona account, so what am I supposed to do? Well, what you're going to do is you're going to go in the Corona account, and then this would match reality. You got to remember, all QuickBooks does is record what happened on the bank. That's it. What happens on QuickBooks means it happened in the bank or getting ready to happen in the bank, which means it actually happened in the bank. So like for me, I've got this separate special account. Okay. Well, if I need to move that 600 bucks, okay, well, I'm just now going to do it as a transfer over to it. Okay. I'm not going to book this to utilities. I'm not going to book this 600 bucks to utilities. What it is a transfer to this bank account. Okay, so if you're dealing with QuickBooks, I think you're following, but more I'm just trying to don't psych yourself out here just because you have a special account. If you're paying the bills directly from the account to ONG, AT&T, the payroll company, right? If they're going directly from your Corona account, I'm in the Corona account, right? I'm in the Corona account. Pay it directly towards ONG, pay it directly towards AT&T, pay it directly towards payroll. So it's going to go directly to utilities, directly to telephone, directly to salaries and wages. But when I click over here and I look into my bank account, the city utilities, the 600 bucks, okay, came out of this account. Okay, it came out of my regular bank account. It didn't come out of the Corona account. So I'm going to transfer money over, but in reality and in fact and for real and on QuickBooks, okay? Everything on QuickBooks in your bank account has to happen literally in the bank account. So when you literally are transferring money from the Corona account to your regular operating bank account, you're showing that the money that came out, see, payment, money that came out, 600 bucks, okay? Yes, it represents utilities, okay, but you're not paying utilities again. You're putting the money from one account to the next account. So that's why out of the Corona account, okay, we're in the Corona account, I'm saying this 600 bucks is going to that bank account. Now, when I come over and I look at the balance sheet, look, EDIL and PPP haven't been touched and they shouldn't have. Okay, because you're just paying stuff and you're putting it to the expenses. Paying stuff, putting it to the expenses. Money comes in the Corona account, okay, and you're paying it direct, then you put it to that expense. Money's into the Corona account, you're paying it directly to that vendor, then it goes directly to the expense. Okay, when I say expense, I mean the expense account, the utilities, the payroll, the telephone. Okay, now if I've spent money out of my bank account and I need money to go from Corona to my bank account to cover it, right? So the money came out of my bank account for the city utilities, something completely different, but it's a covered expense. So I need the money from my Corona account to put into my regular bank account, my operating account. This is all business accounts. So when I record that in QuickBooks out of the Corona account, don't get overwhelmed and think, well, wait a second, if it's leaving the Corona account, does it go towards the PPP? Does it go to the EIDL account? You know, now it's for utilities, it represents utilities, so do I put it to utilities? No. So when you're dealing with these things, just really look at it and go, okay, I'm in the Corona account, but I'm directly paying AT&T. Yes, that goes to utilities. I'm in the Corona account, the money's moving to my operating account. Then I just need to say, oh, okay, this money's moving from here to here. How do I do that? It's just what I had showed you. The account that you're picking is that. Okay. Now, if you're like, well, JJ, I don't do chart of accounts to go like you. Okay. So now we're at quote unquote write a check, even though you're not writing a check. Okay. This is saying we're in the Corona bank account. Here's $600. What account is it going to? This is $600 going from the Corona account to the bank account. That's why it's recorded here. Okay. So now if I were to look here and you go, okay, well, I'm doing write check. Yep, I'm writing a check, right? So if I were to go to banking, write checks, this is where I'd go, right? If I go to banking, write checks, this is where I'm at. So I'm in the Corona account, okay? And if I'm going to pay something directly to AT&T, $200, okay? So it's going from the Corona account to AT&T, then I'm booking that to telephone expense, okay? And all I'm saying is that the way that I've come up with here on the PPP, okay, you record it to the liability when you get it. You record it to the liability when you get EIDL, and then at year end, you adjust it down, or when you know the amount that's forgiven, you adjust it down. And even if you're like, well, I don't know what you mean by that, JJ. This is a part that, don't worry about that part until it comes tax time. In the sense of, or year end, you're just looking at it as you're recording the money. Okay, the money's coming in. It's going to go to this new account you set up. And then just do everything else like you used to. Okay, if the coronavirus funds or the PPP and the EIDL hit your operating account, I just told you what you need to do in terms of you're setting up a current liability account. You code the deposit to that, and then just go about your business. Go about your business. Money goes into a special account and you pay it, okay, directly to those vendors. Then you're coding it to that expense as it's leaving that special account. If money's going from one bank account to another, okay. But the only time you're adjusting the liability is when you know forgiven or when you hit year end, for all the other reasons that I said earlier. So if you're like, man, this, I'm not sure what's going on here. Just know this. I told you the whole concept of how to do it. Okay. And then if you're going back and you're watching this video again, and then I said, hey, there's going to be another part I'm telling you about. I said, hey, I know at the beginning of the video, I said, hey, there's going to be another part I'm telling you about, but that's going to come later. You want to stick around for another 5 minutes or so, because I'm going to show you how to, okay. You got two parts here. The part that I just finished up, maybe in this last 10 minutes here, is telling you how it works if you the money went into a special account separate from your operating account. Okay? So if you're like, man, that part kind of confused me, go back and watch it all. It's more just to say there's two ways this money comes, right? If the money comes to your operating account, okay, pretty much the whole thing of that video is telling you, here's how it happens if it goes to your operating account. If the money's going to a separate account, I just did a little add on there for you to just kind of, back it all the way up to say, okay, if it's going to go into a separate account, you do the same thing. It goes to the liabilities. Then if it's going out of that special account to the vendor, then it's going to that expense. If it goes from that special account to your operating account, that's how you record that. Okay. So if you don't have a special account, then none of that's going to apply, and you can just listen to the first part until I said, hey, I got another part. You know what I'm saying? All right. Well, hey, so listen, for those that, might be looking for, well, I really want to track it along the way or whatever the case is, then you can listen here. But if you don't deal with QuickBooks, if you don't really follow debits and credits, then I'll just say this, thank you for watching. I'd love it if you'd subscribe. Please do. And hopefully this helps. Go back and watch it again if you need to go over anything. But this is what I just went through is how I'm going to do it for my clients. Okay. All right. So for those that kind of follow the debits and credits, the one thing that you could do, okay, is we know that the money came into this special account, the 25 and the 5. Okay. But the other way that you can do it, now I'm telling you right now, if you've kept listening and you don't know, and I say with all due respect, you don't really follow debits and credits and how do you close out retained earnings and you're not sure how adjusting journal entries quite work, you really need to not listen forward because it'll just confuse the hell out of you. And I mean that with all due respect. And the thing to know is what I'm getting ready to go over, I am not doing it this way, not doing it. Not going to do it this way. But for those that are keen enough, kind of have that engineering mind or the total detailed way of approaching it, and they can kind of work two calculations at the same time, this is for that person. So what you can do is you're paying ONG, you can go, well, I'm just going against PPP money. Okay, AT&T, it's going against PPP money. Salaries and wages going against PPP money. Okay, money moves over to that bank account. Okay, just move to that bank account, no effect. Okay, this is going to PPP money. Okay, then let's say that you're paying, supplies. Okay, some supply company. Okay, and $750 to them. Well, that'd be the EIDL money, right? So then, if you go to the chart of accounts, you'd see on your EIDL, okay, so we brought in 5. I spent $750 on supplies. Okay, out of the Corona account. So my EIDL, I've got $42.50 left. On the PPP, you can be like, okay, so I spent at ONG, AT&T, payroll, AT&T. So now when you're looking at your balance sheet, you can be like, hello. You'd be able to say, okay, so this is where it went. 5,000 came in, 750 to supplies. 25,000 came in. Here's where I've spent it. Here's what's left. Okay. But see, what's happened though is that those expenses didn't hit the books here, right? So when I look to utilities, it's not going to include except for what was paid through on the regular bank account, right? Because in the regular bank account, right, I paid utilities, it went to utilities. But in the Corona bank account, all these expenses went to offset the liability. So from the one standpoint, it's like, okay, well, that's kind of nice because I can click here and, I can go, okay, look, sweet. So here's where that went. Here's where that went. And you have your accounting that you can then print this out, send it to the bank, right? With the records and receipts, right? And then you wouldn't have any year-end entry, right? Because you didn't include the expenses in here. The reason that in the other way that I was talking about that we even have to include anything is that's the way you get the money off the books. We record it as a liability. Of course, you're following this. We record it as a liability. Well, how do I get it off? Well, I got to show it on the P&L as a contra expense I put it down in other expense, so it'll show as a negative expense. Makes more sense, I think, to the banks too. But if you're doing it this way, where as you spend it, it just offsets the liability, well, it never touches the profit and loss when it comes in and never touches the profit and loss when it goes out. So there's no entries needed differently. But the problem is, for me, why I decided not to do it this way is now my utilities are skewed. My payroll is skewed, right? Meaning the payroll is actually more than that. And so next year, if I'm trying to do a comparison, or if I'm trying to do analysis of income and I'm trying to compare it to the salaries and wages, well, this salaries and wages is not the real number. It's lower than it should be. So that's why I decided not to do it that way. And even for clients that it's like they're not really paying attention to the numbers, I decided I'm going to do it the way that I indicated at first. So that was just, this would be how you would do it. So it does reduce down your liability as you go along, but it's not hitting your P&L. So if you have a client or it's you and you don't really care about the P&L part, it's just kind of a formality. You've got your financials. Hey, matches the tax return. I'm good to go. Well, nothing hit the P&L. The deposits it's not income. And then your expenses didn't hit the P&L because it all went to the liability and you're reducing down the liability. But I think the best way to go is, and when I say the best way of just tracking numbers for the client, tracking numbers for the tax return, tracking numbers for the bank, even though I'm not doing it for the bank, right? But a client who's doing their books here, I'm going to help record that initial entry. They're going to do all this stuff. And then when they push a button, they send the financials to the bank, right? So anyways, you can do the liability and the reduce down the liability. I just think then your P&L is just off. And so I just don't think that would be really the best way to go, even though it'd be nice and handy. So then here's what I'm going to be suggesting to clients is that, here's your 25 grand. So get yourself an Excel spreadsheet. And as you're spending that stuff, right, just put the Excel spreadsheet. Because really, if you think about it, we're talking 8 weeks. We're talking basic, rent, utilities and interest, payroll. And in some ways, it might even be harder to try and track it in QuickBooks, because if it's actually payroll for 8 weeks, it's actually the rent, we know what's in QuickBooks is just, here's when it was paid, here's when it was paid, here's when it was paid. So that's the other reason I decided I'm not going to use QuickBooks really to worry about, quote unquote, tracking the liability and the reduction in the liability. I'm going to record the liability. I'm going to record expenses as normal. But I'm just going to use a separate Excel spreadsheet for mine own, and I'm going to have clients that using a separate Excel spreadsheet for their PPP, right? Because we're talking about, it's 4 payroll periods probably. It's 2 rent payments. It's 2 utility payments. It's the interest. It's not this. There's not enough to now do some big jerry rig in QuickBooks. So that's how I'm going about it. All right. Hey, thanks for tuning in. I love it. I've been waiting to do the QuickBooks ones. I was kind of waiting, and then we had PPP2 on the horizon. I was like, well, I think I'll wait. But then enough people are getting their PPP money in. So, Clay, if you're watching, I think really what the way that you might be able to wrap your head about it in a different way is just QuickBooks is you're recording it as it happens, right? So if you have payroll and you're using that Corona account, so it's just for Clay. So you got money that came in the Corona account, right? And you got 20 grand that goes to payroll, okay? Of course, you're not doing it the PPP way. This would have gone to payroll. It's going to be on your Excel spreadsheet that you're really tracking it for the bank. It's kind of more what I'm getting at. Probably shouldn't have even, Clay, forget that I even went over to the QuickBooks. Forget that I went over to the QuickBooks. Forget that part. All I'm saying is this, because that's the way we're not doing it. Okay. Go back to the way that I had said in the first 2 parts of this video. But when you're looking at it from just a practical standpoint, it's like, well, here's QuickBooks. I got money from PPP. It went towards payroll. There it is. Right? Because that $20,000 that came out of the Corona account, That was just boom, here's the payroll period, 20 grand for payroll. But then on the Excel spreadsheet, you're actually putting what the actual wages are in the 56-day period. All right. Well, hey, thanks for tuning in. I'd love it if you subscribe. And during the crisis era, I'm going live Monday through Friday, 4 p.m. Central, answering questions that come via email, the questions that we can catch in the comments. We have CPAs that show up and try and answer questions with us, with me, that are in the comments. We've kind of built a little community here. And so feel free to join us on that. Because I'm doing the QuickBooks, I might have some new people that have come and checked out this video that maybe weren't otherwise watching my other videos. So I'm JJ the CPA. Don't you ever forget, you've never met a CPA quite like me. All right. Can't wait till we get through all this, and this time next year, right? When we're looking at QuickBooks, this will just be a comparison to what happened, which means it'll all be in the rearview mirror. We got this. All right. Appreciate y'all.